Every time you buy an item at a retail store or provide a service under a corporate mandate, you are actually transferring principal credit to that corporation. To account for those withheld credits and bring that value back to your ledger, we use a specific paperwork sequence known as the W-4 sandwich. Step 1 is gathering your materials. You will need your original store receipt, a blank Form W-4, a Form 1040-V, a printed copy of the store's corporate policy, and a red pen. Assembling this package records the transaction as a tax liability, asserting your position as an accredited investor in the corporate entity. This image shows a mandatory corporate policy sign. By mandating specific performance for service, they order a commodity, your time. Under Title 26, this establishes a reporting obligation identical to an employer and a worker. Take your original transaction receipt. Using your pen, make a physical checkmark in the upper right-hand corner. Now turn the receipt over. You will write, "Pay to the United States Treasury," sign your name, and then write your Social Security number specifically in red ink. This specific endorsement turns the receipt into a bill of exchange. You have altered its function from a simple proof of purchase into a negotiable financial instrument. Marking the receipt this way proves you transferred value to the corporation, and it prepares the physical asset for processing by the IRS. Next, we fill out the W-4. In lines 1, 2, and 3, enter your standard personal details. On line 5, enter a 0. Focusing on line 4C, enter your assessed dollar value. In box 7, write exempt. In the employer section, list the corporation's name, date, and EIN. For the signature, write authorized signature of the represented person done in good faith. Now we move to the Form 1040-V. You will make this payment voucher payable strictly to the United States Treasury. You must enter a dollar amount into box 3 of the 1040-V that perfectly matches the assessed value you wrote on line 4C of your W-4. Locking these two identical values together acts as a failsafe. It ensures the IRS accurately aligns the tax payment with the exact amount of credit you are reclaiming. With the forms complete, you stack them in a specific top-to-bottom order. The W-4 goes on top, followed by the endorsed receipt, then the printed corporate policy, and the 1040-V at the bottom. You must never mail this paperwork back to the transacting corporation. Send it only to the federal government. You have two options for routing. You can send it to your standard IRS filing location, or you can mail it directly to the Department of Treasury in Washington, D.C. If sending it to the Treasury, address the envelope to 1500 Pennsylvania Avenue, routed to the Office of the Executive Secretary in room 3413. Mailing the package to the Treasury creates a record of tax withholding that the corporation must account for. When the W-4 reports a credit transfer, the IRS reconciliation process requires the business to address that specific entry during their own tax reconciliation. Your paperwork is now fully assembled and ready to mail. Before sealing the envelope, scan and save physical copies of every document for your personal archives. This reporting technique scales backward. You can use this exact process to reclaim value from years of historical bank statements, closed credit card accounts, and past employment records. In this system, you only have 3 ongoing duties. You observe the order, keep accurate physical records, and actively report the events. This process turns everyday expenditures into a documented history of tax credits, available for future use within the federal system.